The South African National Roads Agency, SANRAL, announced that the Protea Parkways Consortium is the preferred bidder for the 10 billion rand Winelands Toll Road project in the Cape. The consortium includes Basil Read, Group 5 and a French company.
And a French company, we're not even going to go try and pronounce that.
Decency forbids me.
Market cap 1.6 billion, price earnings 7.4, dividend yield 2.3. Gerbrand, that N1, N2, and in part it tells us what's happening here. Between that and the Western Aqueduct, that seems to be the only two contracts out there. Western Aqueduct are going back to tender. N1, N2, City of Cape Town going to contest it because they're worried about the pressure it will put on the city roads. Point being is that it's a massive contract. It might just not happen very soon. It might be another 6 or 12 months away.
Yeah, certainly. I think that's probably priced in like a few delays, etc. If you look at the depressed price of Basil Read still, I mean, it had an order book of, I think, 5 billion of work for the previous year. And I think it's sitting with an order book of about 12 billion.
Yeah, up to 10 now. So double their order book.
Going forward. So a lot of work for them, but is it going to happen in the next 6 months or 12 months? That's the uncertainty around it. And of course, they're a bit of a smaller cap. Their market cap's only 1.6 billion. And I normally prefer some bigger companies out there. I don't know, I've just learned over time.
Paul, we mentioned balance sheets before we went to the break on other stocks. These guys' balance sheet not as strong. They're sitting on cash, 560 million. Okay, and a market cap of 1.6, it's the third. But they're sitting on debt of some 800 million, which actually puts them in a negative cash position. And in this type of environment, that's a little bit, makes it a little bit uneasy, coupled with Gerbrand, you know, he calls 1.6 billion a small cap.
Yeah, I think they obviously are under a bit of pressure in that regard. And I think if we look back at some of the stocks we've analysed earlier, you want to be holding tons of cash in this environment. You don't want to be over indebted, and you want to be in a position where you can easily swing yourself out of debt and potentially look for acquisitions. I think they need to basically try and get some of this debt off their book and look to have some more cash.
Gerbrand, there is a view that mining is proving to be a construction cycle hedge, and Basil has gone into a joint venture with Leeton International in Australia, as well as Bogata Burrows here locally in Botswana. But my question is, the capital expenditure that these construction companies need to make in order to start servicing mining industry can be quite phenomenal. Basil Read's capex, for instance, is going to be doubling to 360 million rand. Is the capex justified in the current market?
It all depends on what your view on China and our commodity price is going to hold on, because it's also a cyclical company. And the mining industry is very cyclical. So if there's going to be a downturn, you certainly don't want to bet on Basil Read, which derives a lot of their earnings from mining going forward. On the other side, they purchased TWP, I think, just at the wrong time as well. So that's probably cost them a lot. And it was a huge transaction for not a small company, but a medium-sized company, and I think that probably shows you that management did the wrong decision then, and it's probably costing them now, because they're sitting with a dividend yield of 2, and I'm not willing to wait for upside if I'm only earning 2%.
TWP, without a shadow of a doubt, they couldn't have timed it worse if they tried. It is starting to come around. They got some operating profit out of it, 46 million, which is modest, but it's the first time they've got profit out of it. Operating margin, 9.6 after having lost money. It's getting there, but I get the sense it's probably taken management 3 years, and that's their time and effort, which perhaps they could have focused elsewhere.
Certainly, I mean, if you take 9 million in consideration against some of the other profits and what they paid for TWP, maybe going forward, that's the right area. If you believe the commodity upswing is going to be there, then you want to hold Basil Read, because they got a huge sector going for their order book. There's a huge part of that into mining, and I know most of the analysts are calling Basil Read a buy at the moment because of that. But if you look at what's going on globally, and I don't think commodity prices are yet pricing in any recession in any country. Maybe they came off from elevated levels and speculation, etc., as a bit of out of the price, with a drop of 20% over the last month or two. But if there's going to be any recessions in the developed markets, you're going to probably see these commodity prices coming even lower.
So Gerbrand, do you think it's a hot stock or not?
I'm going to go for not hot, although it's the industry that I do like at the moment. I just think there's better value elsewhere.
Not hot for Gerbrand. Paul, how do you feel?
For me also it's too small, put it in inverted commas, and it's not it's not a stock that I really have much interest in. So not hot for me at the moment.
Not hot for Paul. Simon Brown, before you tell us whether you think it's hot or not, give us your view on construction companies growing revenue by acquisition. They've made a 52% acquisition in Central Systems, which is going to be effective on the 1st of November, and that was worth 15 million Australian dollars.
Yeah, and there's two sides to the coin. The one is what Rick has said yesterday, where last night, where he said, go off and solve your costs. Don't grow your revenue by acquisition. Solve your cost issues, get costs down as tight as possible. Fair shout. The other side of the coin is in this type of market, in this depressed sort of market, there's things out there which are attractive at very, very good prices. I mean, some of these stocks they can go snap up some really, really good companies at good prices. So I'm not completely against it, but I want to see the right deal. We come back to that SACAD deal by Stefanuti Stocks, 300 million, 200 million of it goodwill. That's not my favorite sort of deal. I know, yes, water's exciting, pipeline's exciting, Western aqueducts, etc. When I saw that deal and the market punished them, I wasn't completely surprised by it.
Okay.
And hot or not, Basil Read, I hate to make this a chorus of guys who just agreeing, but it's quite simple. The 1.6 billion, for me, that's fine. I'm not so stressed by that in terms of market cap. What stresses me is their balance sheet. It's not as strong as the others. It's not a balance sheet that's under massive pressure, but it's got a bit more pressure in terms of that 800 million debt, only 500 odd million cash. And that puts it in a less good position. So I think on balance sheet more than anything, not hot. I know for many out there it's a fave, but for me, not hot.
So it's unanimous. It is not hot. Let's move on to something hot like your stock pick, Gerbrand. What have you chosen for us today?
Yeah, look, I'm going for a monopoly company called JSE in South Africa. It's probably trading at a discount.
Should just crashed his car, but
it's probably trading at a huge discount, or it is trading at a huge discount against global exchanges, etc. at the moment. It's trading at about a P of 13, which is probably the cheapest it's ever been. It came off from about 85 Rand a share 2 months back or 3 months back, to about 64 Rand currently. It's holding its level there. I'm not a technical trader, but I think on a valuation point of view, you're getting a 3.5–4% dividend yield on it at the moment, and you're buying a great company which is not going to go away soon.
And what's your take on the BRICS Exchange Association?
Now look, there's some news that came out today which is probably positive, but it won't be for this financial year. I think that will only be kicking in June 2012. I think it's innovative. I listened the other night to one of the CNBC shows, and there was something on Mauritian Stock Exchange that do similar stuff around the world, and you can either choose dollars or pounds or etc. So I think it's the right way to go. It's probably going to have a bit more liquidity from offshore investors. I would like to see it actually in the normal market and not just in the future or the derivative market, but at least it's a step in the right direction.
Yeah, and they can, I'm imagining they will get to normal markets. And one day, I mean, what we should have is you log onto your online broker and you pick an exchange around the world to trade. You shouldn't have these little silos around. Again, Russell Lowe should just crashed his car.
Let's move on to Paul's hot stock pick. What have you chosen?
Today I've chosen Absa Bank. Purely a technical play, around 140 Rand level. We anticipate that it's going to come off from the level.
You're looking at it as a cold stock, not so much a hot stock.
Yeah, no, it's hot on the downside. Yeah, and
hot on the downside.
And I'm looking for a level in the mid 30s. And it could potentially get a bit more support, maybe around 130. But I think, generally speaking, a lot of financials the world over should come under pressure. Although we had decent numbers out of JP Morgan this afternoon, but I still think that a lot of financials are still going to come under a bit of pressure. So for me, I think Absa still going to come down to about a 133-ish.
Hot on the downside, says Paul. How do you feel about Absa? And give us your take on the JSE as well, please.
Absa, I haven't looked at it closely, but certainly this is a strategy for this sort of market. I mean, you don't need to be a technical, you don't even need to be a trader, but the market's kind of range bound. And you buy a Billiton at 215 and sell it at 235, Anglo's at 270, 290, Absa at 140 is probably about spot on. The banks have been moving, our market's been moving. We're going to see some downside probably in the days ahead, maybe weeks ahead. And that's kind of the space that this is where the money is right now, because we're not going into massive bull markets anytime anytime soon. JSE, absolutely. Monopoly, great stuff. Got to love monopolies. You want to trade, you've got to go there. And I know it's not a legal monopoly, but the way it's structured in the FSB and the 15% rule from the Securities Act, etc., means we're not going to get a competing exchange in South Africa. We're too small for another reason. They've got a whole lot of new systems which they've put in place, which are starting to come and kicking in next year. That's going to give them efficiencies. And I think in the shorter term, what we're seeing with this, Paul, these trading ranges type of stuff, a lot more volatility, a lot more trade going through. That's just bottom line money for the JSE.